2024 is expected to have the fewest pre-construction or new condo sales in 2 decades. The city has grown a lot, we've built a lot of stuff, and now people aren't buying anything. Is this going to be a problem for us in the future? Very likely. Is this a problem for us now? Not at the moment. So I'm going to be breaking all of these things down on this week's reaction video. Now, if you are looking for some help on how to navigate this real estate market about your unique personal situation, you can book a call with me using the link that's on the screen right here. And I am finding a lot of people calling me about, their condo or how to sell their condo and move into the freehold space. Because right now, that's where a lot of the shift is going, meaning people are trading real estate. Because what I'm seeing right now is that the first-time home buyers are not really active right now. And we're slowly starting to have the first-time home buyer, like homes, specifically like entry-level condos, kind of sit, right? So we're seeing a weird dynamic shift right now. So if you're kind of snaggled in that little situation and you want to see how to, move on, whether you're buying a new home or getting rid of the investment condo, or whether you should be buying your first condo or not, because that's where all the congestion is right now, you can book a call with me using the link that's right here. It's www.chatwithzen.com.
Simply click on the date and a time that works best for you. And then when you see the prop, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then.
Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So the article we'll be covering today is 2024 expected to see fewest GTA new condos, so pre-construction condos, interchangeable, in 2 decades, meaning 20 years we have not seen this little sales. And what they're doing is basically extrapolating how the year has progressed, meaning the first, call it 4 months or 3 months, and extrapolating it to the rest of the year means that we're not going to have many sales. Our interest rate cuts that we may probably get, at least 1 or 2 this year, going to move the needle a little bit? Not really? Yeah, we're going to talk about that. So one of the first things I quote here is, if you look at all the numbers right now, we're in deep economic trouble. Productivity is failing, which we've talked about, GDP per capita. Real incomes are falling, meaning incomes aren't increasing relative to what inflation is. Despite inflation coming down, it just means that the rate of increase on cost is not as high, right? It's not things are getting any cheaper. And we can't build housing for the middle class, which is what we talk about a lot. And the first-time home buyers are extinct. So there's a lot to break down there, but I will break down the middle class home and the first-time home buyers first. So the middle class home, I would classify it as families who need, call it ground-based homes, 3-bedroom. We're not building enough of those because in the last few years, builders were only making money essentially building condos in super big volume, like 300-400 and like 40-50 stories, or McMansions. That missing middle, it's not quite missing middle, but like call that ground-based home, that entry-level stuff, we're not building enough of it. And to essentially get into a 3-bedroom home that's on the ground, you're looking at anywhere from like $1 million to start in a decent area. So that stuff is very hard to get into. Now, the first-time home buyers, we're seeing it on our side too in the business, where a lot of them are just like, taking a pause right now because they're like, well, I want to see how this all plays out. And there's a lot of inventory building up. So when you don't have the first-time home buyers, there's no movement that goes up because the first-time home buyers have to essentially buy these condos where the people who've owned the condo to move up to the middle to actually make a move. So unless you're trading freehold homes, and I've talked about this in the past before, you're going to have a hard time because selling that condo right now is the toughest thing. So that's kind of why everything's at a stalemate. And just, like this person saying, things aren't looking good. We're going to hit the bottom, but we'll still occupy one of the best pieces of real estate on the planet. And there's lots of people who want to be here. So if we can get our act together on some systemic problems, we'll see it take off. It's just a matter of when. And I would tend to agree with these saying, like, yes, Toronto is going through a lot of change. Some people may not like where Toronto's headed, but Toronto relative to a lot of other places is still really great, right? So like, yes, maybe we're not top 5 anymore. Maybe we're top 20, but we're still like out of, 180, countries, still doing pretty well, right? So I do think that there will eventually be demand when the economics of like, owning a home change. Now, this other part I highlighted here, and what I found very, very interesting is that the report's biggest takeaway is that the GTA land prices are up 22%. Now, so they're saying that they basically fluctuate here and there, but the fact that land prices are going up tells me that it's hard to essentially build for any less, right? Because your land costs, if it's going up, means that people aren't letting go of the land for much. And then your hard cost is generally your construction, your materials, and labor. I don't think labor is coming down anytime soon. And maybe you get a little bit of like price reduction on like your concrete and all that stuff, right? But it's not going to move the needle. So, land is a third, construction and labor is a third, and then your other third is taxes. So realistically, for things to be affordable, you need one of those three things to come down. Which one's likely to come down? Well, land's going up. Construction may come down a little bit. Can we get the taxes to come down a little bit? Maybe that'll move the needle, right? Now, the hope is that the long anticipated drops in the rate will come to the rescue, and even just a little bit. But in this economy, rate drops may not be enough. And I would tend to agree because incomes aren't doing great. And even if you get that first rate cut, I've been saying this a lot, the sentiment may change. Some first-time homebuyers may come off the sidelines, but I don't think it's going to be enough to move the needle because anyone who was already buying in like January, February, March was buying with a 5% rate, give or take, on fixed. Cutting their interest rate from Bank of Canada is going to change your variable from 6.25% to like 6 or maybe 5.75%, which isn't changing the affordability or what everyone's monthly payment is going to be. So that's why I don't think it's going to move the needle, especially now that the market only thinks there's going to be 2 rate cuts this year, right? So our problem goes much deeper than interest rates. Affordability is 30% of gross income, and we're well above 60% now. So we're way far off the mark. And when people start looking for different destinations of affordability, you have a problem. So what they're talking about is people moving to other places that are more affordable. And I've always said, everyone always says it should be 3 times your income in terms of what you're paying. I think it's just a bunch of baloney. It makes no sense. It's the perceived way of smarter. But if you want to live in most places in Canada, it's generally not like that. So you can see basically dating back to 85, 30% is on here. We've never been there. Now, do keep in mind, affordability is based on the interest rates as well, right? And obviously as interest rates got higher, it got worse. But are we going to get back down to like the 30% mark and 40% mark that a lot of people are hoping for because we're going to get a crash? No, because you have to understand that if you buy a property, let's say you use 20% down, 80% is funded by the bank. If that property comes down 50%, that means you're underwater when you sell it. And generally the banks aren't going to want the value of their collateral, the home, being less than the loan. So do the banks have some sway in the political power? Yeah, probably. So that's what I'm saying. Banks are backstopping some of this stuff. So I don't think we're going to see that 50% crash. Now, there would need to be a significant increase in condo sale absorption activity, further moves by various levels of government to forgive HST on condos, apartments, or roll back development charges to move the needle across to allow developers to meet land vendors' value expectations. And I think I highlighted this because it's very important. What they're talking about right now is making the performance work, or what I've been saying, does the math? Does these projects pencil? Because if 30% of your cost of building these condos is in taxes, can you forgive the HST portion? That will do some big savings, right? We saw the government remove HST on purpose-built apartments, and that kind of moved the needle. If you remove HST on the condo, that will help. If you move back the development charges, like even if you go back to 2017, they were like 600% less than what they are right now. Can that move the needle? Absolutely. That would probably help get some of these kind of performas to work so that the land cost is justified that some of these sellers are asking for. Because if the sellers aren't getting their price, they generally own the land for a very long time. They don't need to sell. You're not having like distressed land sellers. That doesn't realistically exist, right? Maybe like if it's a builder who bought it and you're buying it from them at a discount and they lose money, yeah, sure, maybe. But like original landowners, they're probably not feeling it and they'll wait until the market's better to actually sell. So that's why by changing some of the government policies on removing the HST, moving back the development charges, can you save 10, 15, maybe 20% on the total cost to build these condos? Yeah. Now, will these things be passed on? Maybe, right? But at least it kind of moves the needle so that these projects actually make sense mathematically for the builders to build so that we can get more product on, right? That's the problem. So I would say in summary, this is not really a problem for us right now where we have so little sales. If we get through this poo-poo storm, that is the high interest rate environment, bad economy, and just like prices being stagnant, and then we get through the 2021, 2022 kind of ramp of sales, then we'll run into this problem where we don't have sales right now in 2024. But is this a huge problem for the current Toronto right now? No, absolutely not. Is this a problem for us in 6 years if we get past the 2 poo-poo storms that we may encounter? Yeah, absolutely. But until we get past those 2, no one can focus on this problem. And we're just probably going to do what we normally do and kick it down the can. So hopefully this gives you an idea of what's happening in the condo space. I don't think these lack of new sales is going to move the needle for anybody because everyone's still so concerned about closing their pre-constructions that they bought from 2018, 2019, 2020 and onwards, right? So at the moment, right now, this is kind of a nothing burger, but can it be a big problem in the pipeline in the future? Absolutely. Anyways, if you are looking for some help on how to navigate this real estate market, you can book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.